people sometimes chase the wrong things and don't understand how to value certain things like your time, or if you are in a day job, what that means to go do this other thing. So I think you need to get very clear on what is this investment for.
Welcome to another episode of the Radical Hospitality Podcast. I'm your host, Zeke Freeman. Today we've got Tim Ensmann. He is the founder of the Boutique Hotel Fund and managing partner of the Pine Tree Hotel. He specializes in acquiring underperforming hospitality assets and transforming them into high-performing, direct booking-driven boutique hotels. Since acquiring the Pine Tree Hotel in 2023 for $1.5, Tim has helped grow the asset to a valuation of over $4.5 million, building a high-margin operation projected to exceed $1 million in annual revenue, roughly 45% NOI margins. He's now expanding this model through Blue Ridge Hotel Collections, a portfolio of boutique hotel mountains in North Georgia. His approach focuses on direct bookings, audience ownership, and group-driven revenue strategies that reduce reliance on OTAs and increase long-term asset values. So, hey, Tim, good to meet you. Really excited to get to know you a little bit more and have you on the show here.
Pumped to be on, man. Thank you for having me.
Yeah. Well, so we connected up through a mutual friend, Michael Russell, with the Hotel Playbook. And, you know, he had some really great things to say about you, said you guys were really doing things well, driving new growth, and had some interesting perceptions on how to get into this boutique hotel game. So I would love to just kind of step back a little bit, hear a little bit about your background, and then we'll hop into what you guys are working on now.
Yeah, absolutely, man. I won't start too far back and bore the audience here, but my career was actually started in tech sales. So I, started my career working at a smaller tech company here in Tampa and quickly kind of fell in love with it. I really liked solving problems. I liked meeting people. I liked talking to people. And that career blossomed. I had a very good career there, but, you start earning and you start thinking, okay, what are the things that are going to earn for me while I'm sleeping? What are the things that are going to give me optionality to kind of leave this one day and have a little bit more ownership of my calendar, schedule, what I'm doing and all of that. So I quickly found real estate investing. So, was just an avid Bigger Pockets listener, and like pretty much every type of deal I could look and underwrite and do all that. I got into single family homes, and as most people know, the cash flow in single family homes, you need like 100 of those things. So just bought a couple of those, realized this is kind of a pain, especially with a day job. Sold those, did some apartment syndications, and kind of fell into hospitality just because I love traveling so much, man. I see the snowboard behind you. I'm a big skier. Funny enough, because I'm from Florida, I got to this place where it's like, okay, my investments, they're fine, but they don't actually do anything for me. I'm not actually going to go to this C-class apartment building that I'm invested in Ocala, Florida. Like, I don't care about that. But Park City, sure, I'll go there, twist my arm. So bought my first short-term rental in Park City and was really, did the underwriting, had an idea, but really it was, let's see if this is something that can work. And my business partner, Isaac Silverman, who owns the Pine Tree with me, I've known him since I'm 13 years old. We grew up together, and he got his first short-term rental around a similar time. And both of us, it was like an aha moment. We got this booking that, covered our mortgage payment for half the year in like a couple weeks span. So we're like, there's something happening here.
Wow.
Right. And then we quickly scaled that up. We had, over 20 of our own deals that we had done where we'd come in, we'd find an undervalued property, needed some love, come in, do the design, do the, enrich the experience. We'd operate it like a short-term rental, and then we'd either refinance and hold it, or we'd sell it and then roll that into the next thing. And then you do enough of those and you kind of come to this epiphany, like where everyone is. It's like, man, it does really well. We're winning in these markets, but maybe it's easier if we just do one big property versus 10 little ones, from like a capital side, from the financing side, from the contractor side, all of this stuff. So we sort of saw this writing on the wall. It was probably late 2022, early 2023. And we're like, this is the space that we want to be in. We know we like hospitality. We saw things getting a bit oversaturated and crowded in short-term rentals. How do you compete? How do you win? So that's where these, and I'll say boutique hotels, but that's kind of a general term. We really like experiential hospitality, differentiated, unique, bespoke experiences where you go there, and whether the advantage is through a group stay, like you're talking about what we do, or through a unique amenity that you can provide, or just the design or the uniqueness in that market, that's really the space we want to be in. So we'd walked 20 plus properties in Palm Springs, California, because that's where a lot of our business was. And we just could not find anything to pencil. Just the value, the pricing was not matching, where we saw we could create the value. And that's where we came across Idlewild, which had a lot of the same fundamental draws. You're pulling from San Diego, you're pulling from LA. So you have this, 2-hour drive from some major metros, like really good types of customers that we'd want there. So we went and we started looking at Idlewild, and we toured the Fern Valley Inn. This was a few years back now, probably closer to 3.5 years ago. And it just had a lot of the bones that we were looking for. Like, can you host groups? Did it have enough where, the foundation was there? It was already an existing property, had been around for 60 plus years. Had a pool that, the owners were using as a cistern. So they're collecting rainwater because they didn't want to pay for water. So it had, it needed some love. Don't get me wrong. Like, we put a lot of work into that thing, as I'm sure you can attest. Like, it's just a lot of blood, sweat, and tears, man, the first couple years.
Yeah.
But we saw it, and we're like, we know this can be something. So we bought it, and pretty much everything that can go wrong goes wrong, right? I mean, your SBA loan takes forever. You get your fire insurance triples. You have GC bids that are all over the place. So you're negotiating, you didn't budget for this fence that you desperately need, because when you're living on property, you notice everyone and their mother decides to walk through during construction. So it's like you do not fall short of challenges you're going to face, right? And then on top of that, we're in you're a big guy, but you're also small. You're trying to be very conscious of your budget and spend, and spending money on marketing too early, or spending money on this amenity too early, or whatever that may be. So we did it. Construction was a little longer, budget was over, and we believed in what we were doing, though, because we said, we know this is a need in the market. This is the way people are traveling. And now fast forward, it didn't go as fast as we like, but the return, and like as big as it is way bigger than we ever would have thought in this amount of time. So we have 40 something thousand followers on Insta. I think we're pushing 5 or 50,000, followers total across TikTok and Instagram. We covered our debt service and group bookings this year. So if you think about that, like, imagine like 20% of the rooms you can sell just covered your full mortgage payment. That's what we did with the hotel. We have, we operate really lean. People love us. We have hundreds of reviews on Google. People have hosted weddings, like milestone celebrations. So it's just a vibe, man. We really knocked it out of the park, and people love it. And we're doing this again. So we're doing this in Blue Ridge, same concept, same team, same strategy, just bigger. And we're not stopping anytime soon. So we're excited about what we got going on.
I happen to be right in the middle of a project I mentioned that we're, trying to finish up. And of course, we're, over budget and behind schedule. And we're looking ahead and saying, how do we make sure to make this still work in the long run? So I want to dive into that a little bit. Let's start with the short-term rental period. How long were you doing short-term rentals? And what was the way you were financing and capitalizing those to move to scale from one to the next? It sounds like you did 20, so that takes quite a bit to do something like that.
What I'll say, I think, I'll answer your question first, and then kind of double click on if you need to get into short-term rentals first, or what that progression looks like. But I got into short-term rentals for a few reasons. One of them being once again, like I mentioned, just the usability of the property. Like, if I'm able to use this at some point because I like to travel, that's cool. The second part of that was the tax loophole, right? When you're a high income earner, you're making a good amount. I'm seeing tens of thousands of dollars every year go to Uncle Sam, and I'm like, what if I could just keep that? So my fiance now and I, we're like, okay, well, we can manage this, right? So it just kind of met those two key areas. And then obviously you don't just buy something because it's got tax benefits. It needs to be a feasible business. So we also did the underwriting, getting it at a good price, and making sure that it cash flowed. You're asking about how long we were in short-term rentals for. We were in short-term rentals. My first property I actually acquired single family was in 2018. Short-term rentals trickled in slowly after that. So really 2020, I had a few along with Isaac. And then so we've scaled up, you know, it was probably in short-term rentals for about 5 years
Yeah.
prior to pivoting to
And you
boutique.
caught kind of that big wave of, COVID and it pushing up,
Correct.
high
Yeah.
demand, felt a
Absolutely.
little bit of that pullback, it sounds like.
Yep. And we were
Or
doing, I mean, I'll say early on too, what I would encourage the listeners is to get clarity on what you're actually trying to accomplish. I think we really didn't know what we wanted. Like we had cool properties, and I'll give an example. We financed the Park City Place using a vacation home loan. So that was, 10% down.
yeah,
Interest rates at the time, I think it may have been 4 or 5%, but something really reasonable. Then purchased properties in Blue Ridge, Georgia, where these Blue Ridge hotels are. That was also secondary home loan. That was also a nice surprise from the lender where you're about to close. You're like, oh, you need 50 grand more to close. And it's like, okay, thanks. That'd be nice if you guys let us know. Like those type conversations. And then Scottsdale was a partnership. A lot of the Palm Springs were a blend of conventional financing, some hard money. Because what we would do too is we'd acquire a property at a good purchase price and we'd add value to it through a hard money loan. And then we'd just refi out or we'd just sell it. So because we were operating the short-term rentals there. So a mix of vacation home loans, conventional finance, hard money, and then, refi out to conventional. And then when we got into hotels, it was a blend of bridge debt, investor capital, like syndicated, and then
yep.
some SBA financing and seller
Curious,
financing.
do you still suggest short-term rental both for you? Like, is this a viable strategy you think right now? And or if you're starting, is this where you would point people to start? Or would you, at this time, 2026, July, would you skip all that?
Yeah,
So
so
for you and for the beginner, like what
yeah,
recommendation path?
I would say you need to look at your situation and what you are trying to accomplish long term, because I think people sometimes chase the wrong things and don't understand how to value certain things like your time, or if you are in a day job, what that means to go do this other thing. So I think you need to get very clear on what is this investment for. I think short-term rentals actually still, have a place, especially with the tax incentives, right? Or if you do go visit a market multiple times a year, or, there's definitely a place for that. But if you are someone that's like, hey, I like hospitality, I like boutique hotels, I like, high yield from this space, like what are you actually chasing? Because if that's the case, I would steer you away. I'd say, why would you go do one short-term rental that, whatever you want to call it, if it's a $500,000 property, maybe it's doing 100K a year, if that, whatever that is, or if it's a million or million and a half, maybe it's doing couple hundred. But like, why would you go do that when you could go do something bigger? It's going to make more money. You're going to hire more teams, and it's going to be easier to do than to go try to go build up 10 of these. Because if you think the barrier to entry to short-term rentals is a lot easier than a hotel. It is not easy as you're going through the hotel process. Like, it's not easy to go do this. So one, you're eliminating all the people that couldn't go do that. And then two, if there's ever a time you want to go sell it, you're selling to sophisticated buyers. Like, if you've ever been in a short-term rental transaction, they don't know what a cap rate is, the person buying it. They don't care that you did 500 grand in revenue. They're like, that's great, but this house next door sold for 1.5. Why would I pay you 2.5? So you get this, friction. And I'm not saying you can't go do that. I'm saying for a hotel, there's not a conversation. If someone wants to buy us, it's like, we're not going to give you just based off the real estate and the land. That doesn't make any sense. So I think someone that's listening to this, if they're interested, should I go short-term rental? Should I go hotels? I would ask a few questions. Like, one, how much time do you have? Like, what are you actually trying to accomplish? Are you working a full-time job? You have family, kids, if you have 5 hours a week to go dedicate to this, don't buy yourself another job. That's what a short-term rental is, right? The second part of that is like, what are you actually trying to accomplish? Are you trying to scale up a business? Is this a lifestyle investment? Like, what's the actual goal here? And then the second part of that too is, I think, just the expertise, the learning curve, the timelines. Like, there's that quote, it's like, if you're building a business, expect it to be 4 times longer and 4 times more expensive than you thought. If you're buying one, double it. It's like if you're buying a business and it's twice as expensive and twice as long. That's so spot on, man. I mean, I couldn't agree with that more. So I think people get the shiny object syndrome of like, oh, like I saw them doing it for this or that. It's like, yes, but that's a lot of work. It's a lot of work. So understand how much work your return will directly be in line with how much work and dedication you want to put towards that thing to learn it, right? Or partner, anything like that. And I think that's be my first question to that person. Like, what are you actually trying to accomplish here? And then the path may be, a mix of both. Maybe you get your first short-term rental to help with the tax incentives, learn it a little bit. You can learn the lingo, you understand the systems people are using, all of that. And then it's like you come to folks like us that are actually in it, doing it. Maybe you invest in a hotel deal, you understand it. Maybe you partner on a hotel deal. Like that would be my recommendation moving forward, because 5 years ago, it was a lot easier to make money in short-term rentals. It's hard. It's hard to make money in short-term rentals. You'll do it just like you could do anything in life, but there's easier ways to make money. Therefore, why would you make it harder on yourself if that's not like the real goal you're trying to accomplish?
Yeah. Yeah. And, I think there's several places and strategies of where to come in at. We'll talk a
Yeah.
little bit as we get into, whether you're coming in at a short-term rental, whether you're going in at a hotel, or you're going in at limited partnership. I think is a great place to come in. I know you've got some opportunities there to get in and learn and get your feet wet. For you personally in 2026, and we'll do one more short-term rental questions and we'll like pivot into boutique hotels here. Do you see there's obviously great tax benefit that can help offset through depreciation. Are you finding cash flow properties that still make sense for you guys at all to spend time and go after? And would you tackle a short-term rental in 2026? All right, guys, I've got one quick favor to ask. If you've been enjoying Radical Hospitality, if these conversations have inspired you, encouraged you, or helped you think bigger about what it means to create spaces that truly serve people, would you hit the subscribe button? It's a small thing, but it makes a huge difference for our show and for our team. We're working hard to bring some of the most thoughtful entrepreneurs, builders, and visionaries in hospitality, people creating meaningful spaces all over the world, and your subscription helps us keep getting better every single week. And if you're someone who's dreaming about building a hospitality project of your own, that's what we do at Root Architecture every single day. We help clients design and bring those spaces to life. You can book a discovery call with me or someone on our team at therootteam.com. Thanks so much for being a part of this journey. It really means a lot to me. Subscribe, stay with us, and let's keep building cool stuff that serves people well.
Yeah, so not because I've done the diligence on this. So I personally am not looking at anything that's smaller just because it's not worth my time. Yep. Like if it's not going to do $1 million top line, if this isn't something that is more sophisticated, we actually have a marketing budget where we can go drop 50 grand on, paid ads and hiring influencers and hosting events and, doing it the right way. It doesn't excite me because it's not worth my time. We're working on hotels. Why would I backtrack to go work on something that's going to be arguably the same, similar type of work for a lot less money, a lot less time, and potentially more downside. So it doesn't. Yeah. I have a certain viewpoint on this, so this is just my perspective. But yeah, I don't think I'll probably buy a single family home for the next decade. Honestly, I don't see any. There's easier ways to make money, and it's actually easier the bigger you go, is what I'm finding.
A little bit more gap in between, if you could, but you can bring in a little bit bigger team, tackle these. So let's hop into that first project, the Pine Tree, and what that looked like. Sounds like you guys did use SBA. How was that experience? What did that look like to get that thing under contract and then the whole package to finance it?
Yeah. So this is another thing too. I think you can take it from me. So we had done 20 deals, right? And if you look at financing, lenders don't really care about 20 short-term rentals because it's not a commercial asset. It's not a hotel. You've never owned a hotel. So we had some challenges on the financing side, a lot of surprises, so like it's one of those things that looking back, it's so evident. But if you look at from a lender's perspective, what they care about, this property that we owned did just over $100,000 in revenue the full year before we bought it. We just did $100,000 in July in 1 month. So what they did in a whole year, we just did in 1 month.
Nice.
And good luck telling a lender that, hey, we're going to 10x the revenue. They're like, I don't care. They just don't. They don't want to lose their money, right? So it's very hard. I'd say lender relationships, like investor relationships, like you have to find people that understand it. You have to find the right connections. And candidly, like we did have decent connections that got us to almost the finish line there on the lender perspective, but we ended up getting a private investor to finance it. So it was more of a quote unquote hard money loan from a personal connection. So I think things like that were a lot of learnings, but on the acquisition, we were trying to do seller financing with the seller. They needed the sale because they were purchasing a home down the mountain in Palm Springs. We faced a lot of challenges and negotiations with, because the financing was taking longer and because it was an older asset and we needed the phase one, we needed all these reports and things like that. There was some friction there with the seller too, right? Now, we kept a good relationship. We toured it. We were building rapport, so they knew us and we stayed at the property. They saw we were committed, but everyone wants, the seller has different timelines than you. So yeah, and then insurance came back too. They wanted us to lift all contingencies because it had taken so long and we were close to it. And it was just a lot of back and forth in winning that deal, and it's funny because now it's like, oh, it's a slam dunk, but we were even trying to knock them down a little bit more in price. Like, could we get it for 1.3, 1.2? Like, what could we really push? We talked them down for, I think it was close to $2 million. So all those friction points, and then you think winning the deal is the win, and then it's like, no, man, your work just started. Like, you just, you raise money, like you have an obligation, and so we started work the first day, just went after it, and I think what you'll find is what I really love about this space I don't think everything should be looked at as a line item, right? Like a lot of things are investments. And I think marketing is a good example of that, right? Like marketing is one of those things too, that is very I think it's just thrown around loosely. Like what does that mean? Content, what's all that mean? But as an owner, simply, it's just trying to get people to know what's coming, like telling your story, let people know what's coming. That's as simple as just let people know, right? So how do you let more people know of what's coming? And but that's hard to justify. It's hard to say, hey, like we need to put a lot of money towards marketing because there's other things that are important, like your budget and your construction and all of that. So I think, when we started day one, it was kind of that constant balance of, getting the project. And this wasn't our first project. Like I said, we've done multiple short-term rentals, but it is, the timeline's a little bit different when you're doing, a boutique hotel, like a literal, 11 units versus one. And, making decisions like, do we really need this new deck? Like, can we save some of this? We had this old shed that we wanted to repurpose to build as a sauna, but then we started digging into it. It's like, yes, we'll save money, but if we need to do repairs or if we need, any support on this, like it's just going to be this guy that built it. So we don't have any warranties. We don't have anything like that. So you make a lot of those decisions up front, but actually getting into the thick of it, you need to make those game time decisions. So we expected the project to last 5 months. It ended up going 7. You hit delays with snow, Idlewild snows. You hit learnings. Like I think literally before we set a date for ourselves. Well, I'll share a story. So budget was running a little over, timelines were going over, and we made a decision to invest in renderings and put a little bit of money into marketing and what's coming, the vision and all this stuff. And our first booking, I remember this vividly. I was with Isaac and my fiance, and we're sitting there, we're stressing out about the next invoice from the contractor. And a booking comes in. They've never seen it. We had 3 renderings on this crappy website we had, and they booked our place for $20,000 for the weekend. $20,000, more than covered a debt service payment and then some. And we're sitting there, we're like, all right, man, that's awesome. That's all right. That's really awesome. So okay, now we got to be ready by that date is basically what we said. So what we did is we did a soft launch. So we had some neighbors come and check it out, and our blinds didn't come in time, so just, it was all glass windows, all that stuff. So, we're literally wheeling wheelbarrows like an hour before to get stuff cleaned up, and we did it, and they came, and everyone freaking loved it. And then you go through challenges of getting live on the platform. So we were using Hostaway because that we were familiar with short-term rentals, and then Hostaway just had just a ton of problems with the booking experience because we had multiple units, and it was like it wasn't easy if you wanted to if you and I wanted to go book 2 cabins. Like if I'm like, hey Zeke, I got you, I'm gonna book 2 cabins, I couldn't do that. I'd have to click on one, book that one, then go back to the website, find the other listing, and book the other. So you go through learnings like that, and that transition hit us on bookings and our numbers and all of that. And then we started realizing we're like, we've been posting organic content. We've been telling our story. We've been spending a lot of money on that of trying to push all this like cool, trendy content out, which is great. He's a good friend of ours. He does awesome stuff. But what we learned was it couldn't just be you screaming from the mountaintops what you're doing. You need to have other people come and experience, and you need to have them share your story, and you need to have it in their perspective, and you need to, have a certain focus. Like, are they coming for a birthday? Are they coming to play pickleball? Are they coming to, chill out and rest and refresh in the sauna or cold plunge? Are they viewing the town too? People don't just stay on site all the time. They go to coffee shops and they go hiking and all that. So we started bringing people in. We started trading vacancy for, impressions and the audience. And then we started really starting to see some success on social media about people coming to our place. And you go through everything. We learned a little bit about the seasonality, right? We're ramping up and we're trying to figure out what the best strategy is with that. And that's kind of where we came into our group. Our group sales have helped essentially create more predictability in our business, right? Like we target, so we have influencers come, we tell the story we want to tell, and then we'll repurpose the highest performing content to go target San Diego, LA, to draw in people for group events. So people will come book their 50th birthday, they'll book a micro wedding, whatever it is. Our spend is so low to get such a high ticket thing, and people book those out 6 months in advance, sometimes a little bit less, sometimes 3 months. So what we do is we don't allow any weekend bookings past 90 days. So we reserve those best types of, bookings for further out. So what happens is every month we'll have a few buyouts. So you only have a few weekends you can come stay at Pine Tree available every month, if that. So they book like a lot better. They book a lot quicker, even in the winter, even in the down season. So what
are you guys doing to target those groups coming out?
Oh man, Meta is awesome. You can target people that just got engaged. You can target people that have birthdays coming up next month. You can target people that,
And is it part of your ad? Like, hey, bring your family,
Yeah,
out?
we speak to that. Like, is your birthday next month? Like, we speak to celebrate your birthday at the Pine Tree, and then we just run a bunch of different campaigns. And the cool thing is, what's really hard is you need good content. And like, we get the content by partnering with people. So people come, they stay, they love it. We have that, base essentially. And then we go and we repurpose it and we go, target these people.
Are you asking, is that most of that content coming from influencers that are creating it themselves? Or is it like groups coming in, you're offering some sort of discount and you've got your media person coming in and documenting some of that and trade? Or what's the strategy there to get the content from the real experience?
Yeah, it's a mix of both. I mean, you start with your money makers. You start with your wow, like our sauna and our cold plunges in the mountains shows really well. The pickleball court's also really cool with the foliage, like, different times a year. So you give people guidance. You say, hey, come stay. Can you get some shots of this, shots of that? Whatever gaps you have of content, right? What we noticed is we needed more group stuff. We needed more multiple, not just an influencer like, oh, I'm in the sauna, but like a group like grilling out in the courtyard and then jumping in the pool, and a family using the pickleball court, whatever it is. So you focus on those certain things, and then sure, if we get a wedding, we'll say, hey, we'll share the content with you, or we'll comp the content. Do you mind if we repurpose it, if we use it? So it's a mix. I think that's the thing. Like, you can't just say, oh, just do this one thing and it'll work. I think it's focus on your highest likelihood of success with the amenities or the experience that you show. Start with that. Then as you start getting some feedback, then you'll know like for us, for instance, we realized like, oh, people do host their birthdays. So we were getting a lot more like birthday type content or groups coming up to stay. So, and then the benefit of that is you can just overlay text, right? If someone's going to celebrate a birthday or a reunion or your corporate retreat, it's all the same. They're together, they're talking, they're, doing some activity together. And then you can just use that to tailor to target the types of groups you want to attract.
And do you end up selling out as a premium if you're doing a full group, or is it just, hey, the fact that you got the whole block? What type of premium? I'm seeing you nod your head there. Do you add if you give a whole group?
Yeah. We see a significant premium in group bookings. Yeah, I mean
versus a bunch of individuals renting out each room.
Yeah, the gap is not it's not too large. Like if you wanted to just go book all the cabins online, it'd be slightly less. But the benefit is there is a premium. I mean, it varies. I mean, it can be 1-to-1 on like a holiday weekend, but it can go up to 1.5 or 2, depending on if it's a wedding or something like that, which is massive. But then you look at the predictability of it too. It's a non-refundable deposit. They're booking 6 to 12 months out, so you have some predictability in your revenue coming in.
And are you guys doing your own management, or are you having a third party manager that's going after group bookings and those kind of things?
Yep. We do the management. So my partner Isaac heads up all of our like operations or design, all of that, and he has teams. So we have VAs and we have third parties that we work with, whether that's cleaners or maintenance, our maintenance team and guest experience team and all of that.
Yeah. So we've gotten pitched a little bit from our management company that they would go out and target groups. It seems like the targeting, from your experience, would really be Facebook meta ads, maybe the website kind of speaking towards groups.
Absolutely. Yeah.
Maybe talking to some of the wedding hosts or people around. Is there any other strategies that you would utilize if you were just, going after groups to bring those in?
Yeah. How many rooms do you guys have?
22.
22. So you guys can hold 44? Is your occupancy 44?
Yeah, a little bit more than that. We've got a couple of double queens, but yeah, basically 44.
No, okay, 50. And then what's the, do you guys have like a venue space? You have a nice area to host, or would it be more
We've got a really nice rooftop deck.
Nice.
Bar, and then base level, we have a cafe, walk-in space for both public and for guests. And then we've got a conference room. But
nice.
It's more of like small business meeting conference space.
Okay, cool. Yeah, man, that's perfect for it.
And walking distance to, downtown, Morrison and Red Rocks and all that.
Yeah, I think what I would say is, once again, with marketing, I think this is where we've spent so much money and made so many mistakes in marketing, which you need to. Marketing is just like life. You're just trying to get feedback so you can iterate and adjust and like, okay, that didn't work, so we need to go do this. What I'll say is I think people sometimes they overvalue like, oh, we need great content. Like, no, you just need content for this thing that you're trying to do. So for instance, if you're like, hey, I want to go get more groups, you don't need to go, oh, we need a great shot of this. We need just what do groups do? How are they going to use your space? Tell that story, spend a little bit of money in that. And then just go, all right, we think that wellness retreats are going to do awesome here. Great. So start putting a little bit of money in wellness retreats, and then put a little bit of money in, your birthdays and things like that. So yes, I'm a full proponent of it. I think if someone's saying that they can go get and win group business, I would agree with that. I would really seek to learn what their strategy is. Why are they going to start? Do they have experience doing this thing, or are they just they have a hunch? And if it's the hunch, then why are we going to spend certain things in certain areas? I would say don't Meta, these apps. There's a reason why they make so much money. They're really good at, you say something online, you're like, oh, I want a place to host my birthday. I'm sure you're going to get targeted with Pine Tree ads now. So it's like they know what they're doing. So I'd say if you messed around in there, there's probably a really good way to get in touch with those people without breaking the bank on ads. And you do need good content. So it's a balance of you need to spend money on ads. You need to spend money on good content. And if you do that, then I think you'll start to be able to get the feedback to understand where you should really double down.
What's your take on PR, especially in these early launches? Did you guys go after travel magazines or um, publishings at all in the PR pre-launch, or did you just keep it all social and organic?
I think it goes back to, what is your budget, and kind of what is the goal? What's the size of the property, budget? What's the goal here? Because I think from an efficiency standpoint, or we have friends that did that and they invested in it. It seems like it's been a good return for them. So I think there's pros and cons to it. I'm very much of, maybe that's the sales background in me, but I'm like, I'd rather on areas that have just a higher probability of winning. And that's why I think you're not typically like the people you travel with are likely not on those magazines or outlets as much as they're on social media. Like there's probably just like a fair bet that that's the case. So therefore, I'd rather spend another couple grand on ads than a PR outlet, because the ads are going to get you people that have more propensity to buy versus someone that like, oh, I saw you there and I want to go stay. Now those will be better guests, but I don't think that's what the goal is. So I think in the early days, if you're being lean on budget, I'd probably focus on that, like good tailored content to your property and the things that make you unique and showcase the things that you're the best at. And then, yeah, distributing it to the people that you want to actually stay. And I think that's the best, highest ROI on, marketing dollars in the beginning. And then you want to get into the events, the curation, the programming, the influencer strategy, all of that. And then of course, PR once you start seeing some of the benefits from that strategy.
Yeah. Yeah, I want to step back a little bit. As we talked about moving from short term to hotels, there's this kind of higher risk, higher reward, and time helps to kind of level that out. Just like you look at any stock, it's going to go up and down a little bit. And
Yeah.
it's not a matter of if, it's when you hit
Yeah.
some roadblocks and troubles that you have to have the staying capacity to get
Yeah.
through long enough that time helps to get to the other side of that, and there's bigger propensity to be able to win in these. As an architect, we see this all over. As much as we try to like cover all basis and documents and details and fast hard contracts with contractors, there's nearly always, and unfortunately in the industry, over budget, over schedule. And there's ways to mitigate that, pull it down, tighten it, and we do our best. But it's just a common part of when you're getting into this type of business. There's unknowns, and contingencies can help with that. But as an owner on the owner seat, you got to be able to deal with that, especially as you get towards the end. What are some of the ways that you guys leveled that out to deal with over budget, over time? And then how long did that take to kind of level that out and get the project back cash flowing where it was taking care of itself again?
Yeah. I mean, I think a lot of that is, I mean, knowing what we know now, we do things a lot differently with our timelines and budget and, contingencies and all that. So you basically, you
Sometimes
plan.
it's setting expectations, right?
The contractor tells you it's going to be $1 million, it's going to be 1.5, and that's what we underwrite for. And then you work back from there, and if you win it, that's awesome. If they tell you it's going to be 6 months, it's probably going to be 12. So, like, I think it was also in the beginning too. We felt a lot of stress. I mean, we're in it, man, right? Like, so I'm invested, obviously. Like, my mom's invested, my brother's invested, my uncles are invested. So it's like, it's not just like, okay, like, Tim's just going out, and if it doesn't work, like, I care about the people, I care about our investors, I care about, the people that are putting your trust in you. So you hold yourself accountable. And if we say, hey, we're going to do this in 4 months, and it gets dragged to 7, like, that's that's your capacity, or that's your competence, right? So I think in the beginning, the first time with Pine Tree, I think it was a lot of us as the general partners, where we'd have an asset sell and we just roll it in to cover expenses and to keep things moving and to not have to call capital calls and things like that. So I think that's just sort of figuring it out in the early days. I think now what we've done is we've just extremely over budgeted, over estimated on timelines, put in the contingencies, but then also just set expectations with investors too of like, hey, the first year is really going to be improvements. Like that's really what this is, like not to, hey, are we going to be back and forth? Is it going to be 6 months or 8 months? Like the first year is improvements, right? And then it may even carry over to that. So this is, to your point, anytime I get a very big, like, oh man, this is, feeling like a lot of weight, I just look at a 5-year time horizon. I'm like, there's not a doubt in my mind the deals that we have are worth 3x like what we even like when we're seeing this too. We're seeing bigger players, like I had 3 conversations this week with like, these are big guys, like people that that are looking at what we're doing. So I'm like, we see this happening, and their structures are different, man. Like their access to capital, their access to teams, like their access to the distribution, the audience is completely different. So it's here, it's coming, and we're having conversations with those people. So I think anytime where it's like, are we, we're 2 months off or we're 4 months off, whatever that is, you need to have the, diligence and the focus to make sure that as soon as you are coming to the end timelines, like those punch lists are getting knocked out. That contractor is being like, every single day we're having conversations of like, hey, we need to stay on track. We need to stay on budget. Like this is our opening. You set those hard dates on the opening too, to hold them accountable. And then, and you start the marketing from the front. So you're not starting day one, like, okay, we're open, now we need guests. Like we're already starting ads. We're already starting some of these like organic content that we're pushing with renderings and pushing that out. So we're not making those mistakes again. And I think that's just part of it. I think anyone who's been in this business, for long, you talk to them and they're the developers are like, okay, this is going to take 3 years to get this up and running, right? So it's like more patient capital. But granted, for us with our investors, kind of like our strategy, we're just setting the expectation. Year one's improvements in a lot of the deals that we do. That's how you create the value. And during that time, we're building the marketing arm. We're focused on the things to let people know what's coming. And then, yeah, we're just over projecting budget and timelines moving forward.
And so what does this next deal look like as you moved into the Blue Ridge Hotel Collection, and how are you guys approaching this one from capital to lessons learned to goal and project orientation?
Yeah, absolutely. So what's interesting, I kind of took my own advice where Isaac and I had a conversation where, we were having this discussion about what is it? What is this space? What are the deals? What are the relationships? What are, the economics that make sense for us? And as we shared, Pine Tree is an incredible property. It's a great asset. We'll probably push close to $1 million this year in top line. It's still kind of small. It is, right? Like it'd be awesome if we had, someone on site, full time. It'd be awesome if we had an events coordinator that could like greet guests and bring people on and things like that. So we wanted to take it to the next level to where you can actually include those types of people on your teams, those types of experiences, lean into the marketing even more. So our whole thesis is like, hey, it needs to be over $1 million in top line, and these need to be really unique assets. Like when you look at Blue Ridge, that's actually where Pine Tree started. A short-term rental in Blue Ridge. It's still like a top performer on Airbnb. It's called the Treehouse, so you can go check it out. But it does really well. And we're like, what if we had 10 of these? What if we were like on the side of a mountain, it had a lake, or like all this stuff? So we got 2 hotels now that fit that. One's on a golf course on the 10th hole. The other one has its own private lake. It's on 20 acres, sick wedding venue. So we were looking in Blue Ridge. We were like, this is the market. Blake, our partner, his hotel mastermind, came to tour. I don't know if you know Josh and Deanna, they're in Palm Springs, but they're friends of ours. They were up at Pine Tree during construction. So his hotel mastermind stayed at Terra, and they came to check out Pine Tree, and we started, building the relationship with Blake. And the group asked, they said, hey, where would you guys look? Or we said Blue Ridge. Like we would do this in Blue Ridge. Like that was exactly it. So Blake, myself, Isaac, we all kind of had our eyes on this market, and came across both of these deals. One of them's the White Path Lodge. The other one is the Willow Falls. It used to be White Path Lodge. It's now we rebranded to the LJ Resort. But Willow Falls, we walked 3 years ago when the property was $6 million. and we bought that property for 3.3 million on 80% seller finance terms. So
Wow.
that's another thing for people.
Yeah.
Like,
That's
you
great.
just got to stay in it, man. If you've been doing this a year, like you got to do it longer. Like you have to be around, the deals, you have to be around the people, all of that. So when we got to talking to Blake, it was like, one, we can do more together because like I said, we'd rather have a slice of the pie instead of 100% of the grape, right? Like we don't need the whole grape. Like give us a little bit more of a little slice of the pie, and like the pie's going to be a lot bigger and a lot easier. So that's kind of been our perspective of like we know what's worked for us at Pine Tree. We know this group sales function. We know the marketing. We know the design. We know the market in Blue Ridge. And Blake's team does an awesome job on all the operational fronts, the construction, the development side. He's got a 120 unit hotel just up the road in Tennessee. He also owns a short term rental management company. So the actual teams and infrastructure they have pretty dialed. So, we partnered up. It's a collection. So if you invest in the Blue Ridge Hotel collection, you're getting access to both properties. And what's neat about that too is a lot of our investors are somewhat local. So people, that will literally have the ability to have a spritz by the pool when we're ready to go live. I'll send you some renderings in our websites and stuff. But
Yeah, I'd love to see that.
all the boxes, man. I mean, pickleball court, resort style pool, 10th hole of a golf course, speakeasy, pitch and putt golf course, sick like venue area, a nice sauna, cold plunges, a gym in there. The other one, is on 20 acres. It's just really peaceful lake, awesome event center and wedding venue area. And we're going to activate both these spaces, so like live music and, pickleball tournaments and just like a lot of these like influencer events and things like that. And community events too. We'll do cookouts and stuff. So we're really going to lean into what makes these things unique and special, and just take what we've done to Pine Tree and just absolutely blow it, blow it up.
That's super cool. I had no idea you were partnered with Blake on this.
Yeah.
I
Yeah.
went to his boutique hotel con maybe 2 years ago.
Oh, nice.
Yeah,
Okay, cool.
great guy. Him and his wife were wonderful hosts and doing some really cool things. They've been on the podcast as well, and I think it's very cool seeing different groups come together and kind of their strengths that they're bringing each to get bigger things done. So I'll definitely include a link to that. Are you guys still in the process of raising capital on this, and
Yep. Yeah.
what does that look like?
So we're on the final frontier here. Now, SBA's closed. Development has started at Willow. So this is really for the last phase of development. And we're set to be live with the LJ Resort. That's the one on the golf course by October timeframe. And then Willow Falls is likely going to run construction through the end of the year. But we're able to build around it, right? It's not like you can still stay at one cabin if the other ones aren't done because they're not, on the same structure. So, yep, we're raising for that. We have a few spots left. And I'll say, like, as I think about aligning, investments and partnerships and like just longer term goals, it's pretty cool because investors also get access to come stay at the properties, right? Like we do complimentary investor stays, we do investor events. You get to meet other people that, are like-minded and then also doing things in the space too, which is neat. Yeah, my mom's actually using one of our LP stays out at Pine Tree next month, so that'll be cool. But yeah, if you're interested, please, reach out to me. You'll have my email here, and you can, reach out to me on LinkedIn or Instagram, and more than happy to talk to you about it and see if it could be something for you.
Perfect. We'll include links to that. Are you going to be at I think he's got another boutique hotel con in September.
Yeah.
Are you going to be out at that?
Yep. Yeah.
That'd be a great way to connect as well. I haven't booked into it yet, but I'm thinking about it. So maybe we'll end up seeing you out there at that.
Absolutely, man. No, that'd be awesome.
Any last kind of thoughts that I didn't touch on that you're like, Zeke, I wish you would have asked this, that you'd like to share to our audience?
Yeah. I don't know. I think like I admire you for having the show. Like I think it's it's awesome how many people reach out from podcasts like this. So I think if you're in this space, you're interested in, investing, you're interested in learning, like it's a pretty small world now. Just reach out to folks, like get their take, get their experience. I obviously have my perspective, but there's probably a lot of things that I may miss or you know, are different on. So I think one, a lot of people in this space are usually pretty cool people. So they're more open to like share best practices or tell them how to think. And then two, I think I talk with investors. I probably had 50 investor calls last week. And one thing that really sticks out to me that's interesting is I think a lot of times people don't actually sit down to think about what you're trying to accomplish. And I was a perfect example of this. Like, I essentially bought myself another job in most capacities with short-term rentals when that wasn't the goal, right? So I think like there's a way to get to your goal and lean in on the things that you are good at or enjoy doing or are willing to sacrifice for. That doesn't necessarily mean you have to do the whole thing. You don't have to be marketing, guest experience, operations, capital, underwriting, all that stuff. Like, I think that's what's amazing about boutique hotels. You can kind of partner with the right people and allow you to lean in on your strengths. So I would say reach out to people, talk to folks, like get different perspectives on the thing you're trying to do, and then just get clarity on what you're trying to do. Like, what does this look like in the next year? What's my time commitment? What's my, you know, willingness to sacrifice? What's it look like in 5 years? What's it look like in 10 years? Is that something that still excites me? And then, yeah, and then work back from there. If so, then awesome. Go after it, get after it. You'll figure it out. Like, it's the opportunity's there, man. You need more places like what we're building. And, you know, I'm excited for you guys because once it starts pumping, it's like I said, dude, we made our preferred return for investors in 1 month this month, and we're crushing it. So like we're crushing it. Like it's a killer deal, and we're gonna keep repeating that. But if you ask me 7 months into the deal, it's like, oh my gosh, what did we do? What do we do? You know, what do we do? Is this gonna work? So I think there's those phases, and then surrounding yourself with people that have seen the other side is definitely helpful.
Yeah, I don't know if you've ever deep sea fished, but spent a lot of time on boats when I was a kid, and remembered like just getting that deep, you know, sickness in your stomach of watching the ship go back and forth, and while you're looking at it, and you know, I remember my dad said, "Hey Zeke, you got to look out in the horizon and level your eyes." And so that's just been in my mind lately of like, hey, when you're in it, you know, you're in it and it's shaking. But you know, these are long-term, you know, legacy things. And what I love about this community, as you mentioned, it's a much smaller world, especially when you compare it to single family investment and even the short-term investment. The hospitality investment is a very close-knit community. As you start to get in it, you see there's a lot of crossover and a lot of willingness to collaborate. A lot more of, if you're going to go far, you go together. I've known a lot of people in different sectors that I've seen, you know, connect up and now doing projects together. We're looking forward to finishing up this project so we get our eyes on the next project, and made a lot of great relationships with guys like yourself that really everybody kind of just brings a little bit of different value and ideas to the table. So yeah, I appreciate you being willing to share to this community, and I hope to be able to connect up with you here in September. So we'll see.
Yeah, man, that'd be amazing. I'm stealing that. I love that. Look at the horizon. That's such a good, takeaway. That's awesome. Thanks.
Let's go. Let's go.
Yeah.
All right. Well, thank you so much, Tim. Appreciate your time.
Really cool. Likewise, Zeke. Thank you.